Good morning, everyone. What is everyone's favorite candy? Go ahead and share that in the chat as we do have Halloween approaching fast next week. Awesome, Henry. I do like a good Kit Kat. Okay. So just a little bit of housekeeping here. Everyone's microphones have been muted, cameras are turned off. This is just to keep the noise to a minimum, ensure your privacy as we are recording the meeting. Please let us know if you have any questions in the chat or if you're experiencing any technical difficulties. If you do need to drop, you are more than welcome to re-enter or review the recording later. As soon as the recording is available, we will share it with you all. And as always, feel free to ask any questions, put them in the chat. So a little bit about today's objectives. Today, we are just trying to provide education, collaborate with you all, and you guys can collaborate with us. We want to get some audience engagement going. We're encouraging interaction and some active participation just to make this experience a little bit better and just to make goals and know what you need to know to reduce tax liability at tax time. And our main objective out of everything is we are trying to move from just your ordinary everyday tax preparers to more accounting, advisory, consulting, being there more than just tax time. We want to be proactive, strategic, thoughtful, and help everyone reduce tax burdens and come up with some good plans to help throughout the year. Okay, so what is Connecticut PET or pass-through entity tax? It is an entity level tax that's elected by S corporations and partnerships in Connecticut. It was originally created to bypass the federal $10,000 cap on state and local tax deductions, which some of you might know as SALT. This is no longer a mandatory, but an optional election. So a little bit about how it works. The election will be made on the timely filing of the CT 1065, CT 1120 SI. That is the Connecticut Composite Income Tax Return. So you can see down below there is a screenshot right from the tax return where it says pass-through entity tax election. It's optional. This is where you would mark yes or no if you are going to elect to make these pass-through entity tax payments throughout the year. This election is made annually, and once the election is made, it is irrevocable for that year. Once you do make that election, you are obligated to make quarterly estimated tax payments if your annual tax is expected to be $1,000 or more. Here's just a quick payment schedule. So if you elect to make these payments, they will be due first quarter, April 15th, second quarter, June 15th, third quarter, September 15th, and then the fourth quarter is actually January 15th of the following tax year. So currently the fourth quarter payment would be due January 15th of 2026. Penalties. If you make this election and then you fail to make your quarterly payments, the business is subject to interest and late payment penalty. The penalty is applied for each missed installment, even if you true up your payment later in the year to account for that. You still are required to make estimated payments. And then the interest is charged at a rate of 1% per month or the fraction of your total underpayment. So we want to be sure that if we're electing to make these payments, we want to make these payments. And that is something you as a business can do, or we can also do for you. A little bit about how to calculate the estimated payments. So you can choose one or the other option. So what we want to do is pick the lesser of 90% of the current year's tax liability. We can project that out, what we expect total income to be and what your current tax liability might be, and then come up with a payment, or 100% of the prior year's tax liability. So if last year you owed $20,000, that's what we would suggest paying current year if your profit was similar to prior year. Each estimate should be 25% of the required annual payment. Now just throw in the chat, do any of you know how to make Connecticut Pass-Through Entity Tax payments? Awesome. So we have a little bit of yes, a little bit of no. So this will be great. We will walk you through it and maybe just a quick refresher as well. Okay, so how to make these tax payments. You're going to want to go to your My Connect portal and pay using direct payment, electronic withdrawal from your checking or credit or debit card. If you do pay by check, there is a 10% penalty of the tax payment. So we want to be sure that we are making these payments through your My Connect through a direct payment. When you log into your My Connect, you're going to see Pass-Through Entity Tax, and then you are going to go to make an estimated tax payment. You will also see there your balance and available prepayments that will help you realize how much you've already paid in. Then after you click make a payment, you're going to want to choose payment type estimated payment, and you want to make sure you have the correct period end date. So currently it would be December 31, 2025, you're making a Connecticut pass-through estimated payment for. So some of the benefits. These payments are a deductible business expense for federal income tax purposes. And then the owner will receive the corresponding tax credit on their personal 1040 return. And it won't be the complete credit, but it would be 87.5% of your share of the tax paid. I just want to walk you guys through a quick example of how this works. So if you're a partnership doing business in Connecticut, there's two partners, each are 50-50% owners, and the partnership has 200K of expected income. They're going to want to make a pass-through entity tax payment of $13,980. Now that is 6.99% of the 200K that they're expected. The schedule of payments would be similar to what we talked about, April 15th, June 15th, September 15th, in January of the next year. You are going to just take a portion of that $13,980, divide it out to make the quarterly payments. Now, each member will receive a Connecticut K-1. That will show their $6,990 share of the tax paid. They will claim a credit on their 1040, as we talked about, 87.5%. 87.5% would be about $6,116. Now that $13,980 of the state taxes paid is going to be a complete business deduction on the federal return of the businesses, and that will reduce federal taxable income. The reduced taxable income will then come over to the K-1 and the partner's 1040. Now, does anybody have any questions this far? Okay, awesome. So since there are no questions, we just wanted to reiterate that if you need tax planning, consulting, have any questions, we're always here. There is an option to schedule appointments on our website, as you can see here. If you go to champy-tax.com, and right at the top, you can schedule an appointment with us. We'd be more than happy to talk about your income year to date, maybe some pass-through entity tax payments, and maybe what we suggest for the remainder of the year to get you on track. We want to talk about some upcoming webinars. We are going to do a One Big Beautiful Bill again next Thursday, October 30th from 7 to 8. This will be focused on the individuals. We will then also do employee versus subcontractor check-ins Tuesday, November 18th. So that's important when we're talking about W-2s and 1099 time in January of 2026. And we are going to do a One Big Beautiful Bill specific to tax and overtime and gearing up for tax season. So we encourage you all to join. And of course, I just want to thank you all for joining. If there is any questions, please let us know.